Welcome back to TeshKidFX for another price prediction update, and in this video I'll be giving you a price prediction update on Polygon Matic, whose current price stands at the $0.8224 mark, and here on TradingView the market is down by 0.72%. And in this video I want to give you the key scenarios that I expect to play out, basing my analysis on the Elliot waves and the Fibonacci's, and also the key areas of support and resistances, and also draw out the key chart patterns that you have information on this chart. So if you're interested in such content, make sure that you stick around till the end of the video. And I'll kickstart the video by giving a brief of what has been happening on this chart. Polygon Matic from the all-time high has been seeing no prices in this massive ABC correction, which has now taken us back to around the $0.32 mark, and having done so, I believe it has done the minimum that we expected it to do in its ABC corrective movement. And I'm expecting a very nice bounce to the upside in this Elliot wave structure, having a wave 5 taking us back to an all-time high. But before we get to an all-time high, we first need to see a first wave to the upside, and I believe that is what is information here on the Polygon Matic. And if I jump to the 4-hour chart for further analysis, here on the 4-hour chart we have this yellow fractal wave within a wave 1, where I believe once you see the formation of a wave 5 to the upside, that will be completing the formation of a higher Elliot wave count 1. And if I get a little bit into the formation of that fractal wave, so that it can also give me the key scenarios that I expect to play out on this chart, after making a low at around the $0.32 mark, we saw a very nice bounce to the upside and made a high for that first wave to the upside, then saw a very nice retracement to the lower side in the formation of a wave 2. And using the Fibonacci's, we can get the minimum target area for that retracement to the lower side in the formation of a wave 2 between the fib level 0.382 and the fib level 0.618, and you can see we retraced into that target area, then saw a very nice bounce to the upside in the formation of a third wave, which I had a target area here on the charts within this yellow target area at around the $0.93 mark, and that I was basing it on the trend based Fibonacci's, connecting the low of the wave 1 to the high of the wave 1, then dragging the fibs to the low of the wave 2. That gave me a minimum target area for that third wave to the upside at around the $0.92 mark, and that is at the fib level 1.618. And after doing that third wave to the upside, I expected a very nice retracement over here in the formation of a third wave. And initially here on the charts, I had this high at around the $1.02 mark as the high for that third wave. Then whatever we saw over here was the retracement to the lower side in the formation of a wave 4. But the moment we managed to break above the key area of resistance at around the $0.95 mark and made a new high, that made me to change scenarios, having the new high at the $1.06 mark as the new high for that third wave to the upside. And whatever we are seeing over here is the formation of a fourth wave to the lower side. And because a wave 4 is a retracement of the third wave, we can get a minimum target area for that retracement to the lower side in the formation of a wave 4 using the Fibonacci's. I just need to connect the fibs from the low of the wave 3 to the high of that wave 3. That gives me a minimum target area for that fourth wave to the lower side between the fib level 0.382 and the fib level 0.618 as a maximum down there. And removing the Fibonacci's so that you can see this better, you can see Polygon Matic has continued to respect that, and I expect once we maximize the formation of a wave 4 down here, then we can continue pushing higher in the formation of a wave 5 to complete a higher Elliot wave count 1. And over here we also have the formation of a channel. We had been trading within a channel over here, and if I draw it out, connecting those highs like that and the lows down here, you can see we have a perfect channel over here which has continued to be respected by Polygon Matic. And before we saw a movement to the lower side, we had been trading within it, touched the upper part of that channel, then we saw a very massive breakout to the lower side. We managed to break out of that channel to the lower side, and at the key area of support at around the $0.78 mark, we found support once more, and we are seeing a bit of a bounce over here. And because our wave 4 is a corrective wave, we also expect to see a corrective movement within our wave 4, and I believe that is what we are seeing over here, having this as the wave A. Then the high that we made at around the $0.94 mark, that is the high for that wave B, and I'm expecting lower prices in the formation of a wave C to get us into this yellow target area in the formation of a wave 4. And for that to play out, I would expect us to lose that key area of support at around the $0.78 mark, maybe even have a retest of that key area of support and continue pushing lower in the formation of a wave C to maximize our target area for that fourth wave to the lower side. And once that plays out, then we can expect the formation of a wave 5 to the upside to complete a higher Elliott wave count 1. And we also need to have invalidation points here on the charts, because this is an Elliott wave structure, and the only time we can invalidate that movement to the upside in the formation of an Elliott wave structure over here is the moment in the formation of a wave 4 we retrace back into the high of that first wave of that Elliott wave structure, and our high for that first wave was at around the $0.62 mark, and that is within this dotted line that I have here on the charts. In case we retrace into that target area, that is that dotted line, then that will be invalidating this Elliott wave structure, and I'll have to remove it here on the charts and view this movement to the upside as something else. So let's be patient and see how that plays out. Also taking a look at the indicators here on the RSI. On the RSI, we are trading at around the 45 mark. We have a bit of room for us to support any movement to the lower side in the formation of a wave C. And also taking a look at the MACD. On the MACD, we have printed a bullish cross, and that would mean higher prices could be coming our way. So we might see a bit of a bounce over here before we continue pushing lower in the formation of a wave C. So let's be patient and see how that plays out, and I'll keep you updated.